It's here. We are redefining what it means to sit at the girls' table. Hello, everybody. Welcome back to Girls Table, a podcast where founders, careers, and investors share their stories. Today, I'm joined by Jalak Jobanputra, who is the founder and managing partner of Future Perfect Ventures, which is a venture capital fund investing in decentralized technologies. Jalak has invested in over 50 companies in the blockchain, crypto assets, AI, and Internet of Things spaces. She is also the founder of Collective Future, which is an organization that fosters diversity and inclusion in the blockchain sector. Prior to Future Perfect Ventures, Jalak was director of emerging market mobile investments at Omidyar Network and senior vice president at the New York City Investment Fund. So Jalak, thanks so much for coming on today. How are you doing?
I'm doing great. Thanks for having me. It's great to talk to you.
Of course. And so before we really just dive into things, I was looking at your bio and you were actually awarded Microsoft's VC Trailblazer Award in 2018 for your early and bold investments in the blockchain sector. So I really want to go back to the launch of Future Perfect Ventures in 2014 and its early years. So what made you so bullish on this space so early on?
Well, I've been a VC since 1999, and I was a tech and telecom investment banker before that in the mid-90s in New York and London. And so been around tech and its precursors in terms of, telecom infrastructure for my whole career. And I was at a point in my venture career that I just saw so many opportunities that were not being addressed by the venture landscape. And before I get to the blockchain piece of it, one was something that we talk about all the time, which is the lack of diversity in the sector. And that was not really talked about 10 years ago. I mean, and things have changed a lot. And my perspective was always that if we are funding the future of innovation as VCs, that we have to look like the future users, or, look at the demographics and look at who's using technology, who's spending money on technology, where is more of the growth and mobile phones and, all these kind of demographic trends. And I did not think the VC landscape reflected that. And so I saw an opportunity to go out there, launch a fund. There were very few female founded firms back then, but I thought I had the experience to certainly do that. I was born in Kenya. I'm Indian by ethnicity and, spent time at Silicon Valley, New York, London. So really, truly have this global base, which is what the future usage of technology was going to reflect. So that was one piece of it. Another piece of it was talking, these global trends. There wasn't a seed stage fund that was focused in a truly borderless fashion. And that sounds kind of silly right now because we're both in crypto and blockchain, right? And Web3, and it's inherently global. And hey, we were just talking about NFT NYC, how many people from around the world were there, right? So, but 10 years ago, it was very unusual to start a fund that invested anywhere in the world. And I was also able to do that because I was at Omidyar and was at places at Lehman Brothers in London, and was able to have built a network globally of trusted advisors and investors and LPs. So those were the two reasons I started thinking about the fund. And then I went to a Bitcoin conference in 2013. And as it was part of my exploration of, I've done a lot of fintech investing over the years, just was really intrigued by the self-sovereign currency that was validated by software. Spent a lot of time investing in AI prior to starting FPV, and we've certainly been investing quite a bit in the space, and thought it was really interesting to use verification of databases. And then, of course, I knew what Ethereum was working on, the Ethereum founders, on adding that layer to smart contracts. So it was completely immediately sold as soon as I was at that conference. And I got goosebumps, like literal goosebumps, like I did the first time I logged into the internet. And I just felt like this was just such important technology to address kind of the challenges that the internet left behind in terms of data transparency, data security, look at the world in terms of what percentage is unbanked, that doesn't have access to education. I thought a lot of this technology could go a long way in helping solve some of these challenges that remain.
I can't even imagine what the conferences looked like back then, because even I was just saying how I just got back from NFT New York City. 3 years ago, it was a complete boys club. I was probably the only woman at every single party. The next year, it was the bull market. It was these crazy intense parties. And then this past zone was more intimate lunches and dinners with people that you knew. So what was it like back then going to a Bitcoin conference? Because I honestly can't even imagine. And how many people were there?
Like probably about 100, not too many. And there was one other woman, Catherine Nicholson, who I actually ended up investing in, one of the founders of Block Cypher, which is one of first node infrastructure companies, and focused on Bitcoin at the time, but then expanded to other protocols. But it was really fun to connect with her and really just see how non-diverse this conference was. But I have to say, a difference that I noticed there was that everybody there was passionate about the technology, passionate about making sure that the promise of this technology got out there. And this was, when Bitcoin was, Mt. Gox had just happened. And so the price was under 1,000. Bought my first Bitcoin, it was around 300. Wow. And so, people who were still in it, kind of like people who are still in, the Web3 space now, they're really dedicated and believe in the technology and the potential. That's how it was with Bitcoin. So you had, kind of us against the world kind of mentality of, so many people had written it off or said, of course, this is being used by money launderers and that's the only use case for it. And yet I was talking to entrepreneurs, and it really didn't matter that they were men or women, but they were just passionate about making sure that they're passionate about building on this technology. So I just really enjoyed it and was so inspired by it. And of course, it was great to meet Catherine and invest in her. They've done incredibly well. And then over the years, we've certainly seen more and more women get engaged in this sector, which has just been so wonderful to watch, because just like I started the fund to create, female-led fund, I really want to see more women participate in all elements of Web3. I don't want to see what happened with the internet. Web3, we want to make sure that different points of view are represented, that different products are being created for the masses and not just a few folks. And so it's been wonderful to see more and more women and more people from around the world start to build and engage. And so I've been really... it's really heartwarming for me to see how different things are now than 10 years ago.
Yeah. And so you're going to this conference, there's 100 people. You're also a woman. You obviously have the background of being a diverse woman starting a GP fund. And you started this fund in 2014. And at the time, I could only imagine what people were saying about crypto, where, as you mentioned, it's being used for drugs, money laundering. Yeah. So how were you able to raise your first fund? And who were your big LPs?
Well, great question. That was a very, very challenging process. And to be honest, because I had been a VC for as long as I had at that point, over 10 years, I had a track record of companies that had IPO, that had sold to companies like Google and IBM. Yeah, I did think it was going to be easy to raise, because I also raised as solo GP. I was surprised at the pushback that I got, because there were I'd say 99% of the world did not see what the promise of Bitcoin, which was really the only one in town, right? I mean, we knew Ethereum was going to be released soon, but for the people who, would read about it, they read about Bitcoin and all the scandal, and this still happens to this day, right? People read about the sector and they read about the scandals, and there's not a lot of press about, wow, like, what are the use cases? How is this really helping people out there? How can it create more efficient capital markets, even for enterprises? And so that part of the story was never told and is rarely told. And so it was an uphill battle. I tell people I cashed out. I had worked at Intel for many years. I cashed out all my Intel stock. I cashed out most of my retirement savings, took huge risks, but I didn't, now it seems crazy to have done that. But I just didn't think twice because I had been so convinced of the internet in its early days, and I had that same feeling. And, this time around, I wanted to be able to recognize and be able to participate in the financial upside. And so I just, kind of went all in. I had the 2014 vintage, amazing companies, entrepreneurs, tons of unicorns. I mean, obviously the market's been hit a bit over the last couple of years, but these founders are resilient and they are passionate about what they're building, and they're all still around from that 2014.
Wow. So what fund number are you at now? And so how many funds have you done since you first started in 2014?
So we're investing out of our third fund.
Oh,
right
wow.
now.
That's awesome. So so who were those LPs that you could really get into that first fund in 2014?
Yeah, so it was a lot of entrepreneurs that I'd invested in over the years who had liked working with me, who had always said, if you do your own thing, whether it's investing or operating, let us know, we'll put money in. So there were those. There were certainly colleagues of mine, interestingly enough. This is what I always tell people. Careers are long, and so you never know who's going to come back, right, into your life. A number of folks that I worked with at Lehman in 95 and 94 came in, asked to invest. Colleagues of mine from undergrad, from business school, they continue to support and invest. And so it was really cobbling together, folks that I knew. And some of them would introduce me to others. It was mostly family offices. There was one endowment, which was Peter Buffett, Warren Buffett's son, and has a foundation with Berkshire Hathaway stock. And this was the only non-Berkshire holdings that they have, which was Future Perfect Ventures. But they really liked the fact that I was paving this way as a woman-led fund. I was doing it in a sector that had a lot of impact potential if we invested in the right entrepreneurs to create a more equitable world. And that's certainly something that they care about.
So before I get into your investments, I just want to ask, is there any advice that you have for either women or men who are looking at being a solo GP and starting their own fund that people don't really think about when they first decide to?
Yeah, it's hard. I think being VC as much, and you know this too, right? I mean, it's fun, and there's nothing else I would want to be doing, and I feel very privileged to be doing this. It's not all about, going out to parties and talking to companies all day long. I mean, we do that, and that's the part I enjoy the most, but then there are difficult times like what we are experiencing now, which is, having some real conversations with founders on, survival and what they need to do to get to that next stage, and, just roll up the sleeves and work with them. And I enjoy that piece too, but I think for founders as well as VCs, they have to understand that that's part of it too. At the end of the day, unless it's your own money, you have LPs that are fiduciaries that you return money to, and that's how you raise your next fund. And so there is that portfolio management piece of it. And I found that founders who, come from starting their own companies and then have successful exits and then make a switch over don't necessarily always like that portfolio approach, right? They like to dig into a few companies and help. So and others love it. So I think it just depends on what you want to be doing on a day-to-day basis, understanding that you're not running the companies, the founders are. And at the end of the day, you can sit on their board, you can have votes, and you can have impact, but that founder is ultimately the one who's going to make the decisions and be in charge. And that trust relationship really needs to be there. Communication needs to be there. So, and that's what I found to be the most productive, best performing investments have been the ones where there's a lot of communication, both before the investment and then after the investment, where we know things are going to go wrong, right? Especially in a nascent market. This is inevitable. So we expect things to go wrong, but we just want to be able to troubleshoot with the founders and bring our experience, our network to the table so they're able to move on more quickly from those challenges and get back to building.
Yeah, and I could see how that's definitely being highlighted, especially in this market when everybody's running out of runway, they're trying to cut burn, and it's like, how could you, as a VC, really help them and sit down and get your hands dirty?
Yeah.
But I want to jump into your investments. So when you're going out, you're looking at different investments. Say, what do you usually look for in a startup before deciding to invest in them? And also, how has your investment strategies evolved over the years?
Yeah, so I can tell you do this a lot because your questions are
Thank
great.
you.
So the most important part of an investment is really the founder and the founding team. Now, we are thesis driven at Future Perfect Ventures, so there are parts of the Web3 ecosystem that I am drawn to, that I like. And it really depends where we are in a cycle of adoption. But, what I saw with the early internet is you need the infrastructure in place before you could start building usable applications for people. Dial-up was so slow. Back in the day, I remember trying to get one of my senior bankers to use the internet. And he's like, why would I, go through dialing up and then setting up an email address when I can just call the person on the phone. And I think this was in 95. and so, you could argue with that. And I think there have been a lot of similar arguments around blockchains, Bitcoin specifically, taking too long to verify transactions. But the reality is this is not static. We're constantly improving, whether it's the core protocol or, layer 2 protocols on top. And there's a tremendous amount of experimentation right now, which is why it makes this time period exciting. So I believe that, we are in one of the most exciting times to be investing in this sector. We have more and more entrepreneurs who are building, are motivated to build. We have Web 2 entrepreneurs who are fascinated by what they can now build, which they couldn't do in Web 2 or Web 1. So I think we're, at this stage of investing that's in lots of great companies being formed during this time, this crypto winter, if you want to call it that. I don't know if it's still a crypto.
I'm hoping it's not. I'm hoping we're going to spring a little bit. Things are picking up.
Yeah. And I mean, certainly the prices are. I mean, I think the biggest question right now is regulation, right? We just had SEC claims, 5 or 6 tokens were securities. And, until this turf war stops between the SEC and, the CFTC and FinCEN and all these other folks, I don't know when we're going to get true clarity in the U.S. In the meantime, the rest of the world is moving on with their CBDCs, with their guidelines for, what securities are, guidelines around DeFi. So, I do worry about the U.S. falling behind this particular.
Yeah, for sure. So you find these companies, you're really excited about it. What is your due diligence process at Future Perfect Ventures when you ultimately first see the company to that first meeting to then deciding to write a check in and invest?
Yeah, so we do a lot of pre-seed and seed. We'll do some A's, and when you do the A's, there's a lot more that's referenceable. There are usually some customers you can talk to. Pre-seed or seed, if there's a product I can play around with, I certainly do that. That's one of the most fun parts, and where you can provide feedback to the entrepreneur. And I also just look at competitive landscape, but who else? And what's interesting at my perspective is that we are now at the 3rd or 4th cycle of innovation in crypto and blockchain since I've been around. So I have seen identity platforms from 2013, and I continue to look at identity platforms in 2023. There's similarities or differences. There have been some improvements, but what I find a lot of entrepreneurs could really benefit from looking at what's been tried before. And so we try to provide that perspective to them, having been investing in the space for a while. And so want to make sure that their lessons learned from either their previous startups or the previous attempts at the technology that they're attempting, and just feel like we have a trusted relationship with the founders. And so it's just spending some time together. So, in the heyday when deals were getting done overnight and there were, safe prices would increase every day. We didn't really participate in those because that was not the dynamic that we think leads to, truly long-term investors and long-term minded companies. So we sat out of a lot. And I think a lot of those founders have come back to us in these different market conditions, looking at potential restructuring. And we're happy to do that, but I just think it's something to keep in mind that you're not necessarily doing the right thing by optimizing for valuation in your first round when you're going to have to raise money and you don't know what those market conditions will be. And if you find the right investors, they will make sure that you have the equity you deserve, whether it's future grants and I have rarely been part of an investment syndicate where, the founder, we think the founder needs more incentive or may have given up too much early on where we don't refresh options. There are ways to correct for things like that. So I just think it's important to be able to trust both ways and know that, I want to know the founder's going to take care of me in terms of, making sure we have our pro rata rights and we don't get crammed down unless, it's absolutely necessary. And I want the founders to feel a level of comfort that they're going to be compensated appropriately and incentivized appropriately for the amount of work they put in.
Yeah, and I think a lot of people forget that if they're raising this crazy valuation in one of their early rounds, they really have to show traction revenue in the future to be able to actually raise at a higher valuation. I think we're seeing so much now where they've raised at these crazy valuations and now they're going out and they can't even go close. So there's so many down rounds happening and they're giving up even more of their company. And obviously at the time it's really exciting because you're getting diluted so much lower as a founder, but eventually I feel like it's coming back now. So are there any other mistakes that you're really seeing either now that individuals are making when they're going out and raising a round of funding?
Yeah, I mean, I think you've touched up, we both touched upon the main ones. What I also, especially when you're looking at some of the token raises, right? I wish more entrepreneurs would really pay attention to the syndicate and the motivations of the syndicate and the timelines of the syndicate. There's one that we participated in and the founder was really upset that as soon as the unlock happened, a bunch of their investors sold the stock, it brought the stock price down. And, I think you really need to know and have that conversation with your investors. You're letting them invest in your company and, you have a right to have a conversation on what their motivations are. There's nothing wrong with saying, okay, I'm only going to be in it until the first unlock, but the entrepreneur should know how to manage that process or decide that they don't want an investor like that. And so I feel like, when these mega rounds are happening, everyone's happy, it looks great. But then with these tokens, it's as the unlocks happen, there's just some behavior that wasn't, the founders didn't expect. And it's creates issues for them. So my advice always is like, you need to have that upfront conversation with, if they're going to dump half of it, 20%, it's okay if they want to liquidate some of it, but you need to know as a founder what the expectation is going to be. Because that was something that was never of much concern, right? If it's a straight equity deal.
Yeah, no, it's true. And they're able to actually have this liquidation event. So a lot of people are to get back to their investors. So I want to go
Yep.
back to the investing side of the house. So could you share a success story you've had of a startup that you've invested in, and what do you think actually contributed to their success?
Yeah, so they're a bunch. I mean, I'm gonna go way back to one because I think it's pretty interesting. It has a few different sides to it, and then I'll talk about something that's a little bit more recent. But Yodlee was an investment I made 1999. I think it was my first venture investment when I was at Intel, and Intel's strategy then was to just invest in internet startups that they thought were going to use a lot of the computing power, because Intel is all about selling computing power with their chips. So they wanted to see a lot of internet usage. This company, Yodlee, was one that actually, brilliant idea, single sign-in for consumer applications, right? Sounds very simple. But what they found was that there weren't enough people on the internet to care about single sign-in. There weren't enough people, and there weren't enough sites out there that enough people wanted to visit on a regular basis. But through having created this, they came across a use case with banks that, if I bank at Bank of America, they have a lot of my information. Well, wouldn't it be great if I could import my Fidelity information there? And so they came up with this concept of financial APIs, where you could see your whole, financial picture from different sites in one place. So they were one of the first to come up with this concept of open banking and allow data to be portable across different financial sites. So they IPO'd, and then they were later acquired by Envestnet, but they were very much a precursor to Plaid, which we've all heard a lot about. Plaid kind of took their technology and took it one step further. So that was incredibly rewarding to see the pivot, the major pivot away from consumer to, they just saw this opportunity with banks and financial services and this sticky customer, and then kind of took off from there. And so that was a great deal. And then more recently with these funds, I'd say blockchain.com has been one that, they're profitable. When I came across them in 2014 at the Blockchain Explorer, primarily for Bitcoin. But Peter Smith, the founder, very resilient, very capital efficient. So did not go out and raise lots of money until just actually a couple of years ago. So busy iterating on what made sense. I mean, they built out an institutional product, they built out an exchange, so they definitely expanded. But I would say one of the reasons they have been able to survive is just how capital efficient they have been able to be through even these, real bull times.
Yep.
And then we have, companies like The Graph and Alethea, which are both tokens. And my bias is towards, infrastructure, and, love what The Graph is doing in terms of, allowing developers to create subgraphs to be able to come up with applications utilizing data across different blockchains. And it fit into my interoperability thesis, which was part of the original 2014 thesis. Fantastic team. And then Alethea is one that's directly in the AI space. And Arif, the founder, I actually went after him. I found him. I said, I really want to learn more about Alethea. It's right, up my alley in terms of what I've been looking for, and just started kind of experimenting with some of the avatars that they had. And remember spending one night talking to Darth Vader for 5 hours, trying to trip him up. and remembering my Star Wars, sagas. But it was just so well done. And, one of the things I do think Arif cares about is responsible use of AI, and us being able to own data that we're helping, create these avatars, but at the end of the day that we would hopefully still control and own those. And so I think that is one of the question marks of, this generative AI, and Does it take on a life of its own, or can we bring, pieces of it back to the people who own it, who then can control what they want to do with these? So I think that's a very
We actually
interesting
did
question.
a syndicate with that one as well.
Oh, great. Okay.
With Alethea. Yeah. It was right before I started. But so I want to ask this because I think one of the most important qualities of a founder is to be scrappy. And sometimes you just got to go out of your way to make it work, find customers. But I also think there's a side, especially which you've probably lived in, where venture capitalists also need to be scrappy. They want to get allocation in these high profile deals. So I want to ask, especially probably in the bull run, you experience this more.
Yeah.
But what's the scrappiest thing you've had to do to get allocation in a deal that you really wanted?
Yeah, that's so true. So, I remember, with blockchain.com, that was a time when there weren't a lot of funds investing in the space, but Peter hadn't raised a lot of money. So, and nor did he feel he needed to. So, I ended up participating in a pre-A round with only a $600,000 round. Lightspeed came in later with the A round. Yeah, we were, he's like, let's get to know each other. And, I think one of those evenings was like a big group of us and team members playing Cards Against Humanity on their roof deck, which was actually quite fun. But it was, we just got to know each other, doing things like that. I think it's, whether it's going out to dinner, whether it's, I'm not a golfer, but if I were, going golfing.
I wish I was too.
Like go in Miami, can like rent a boat for a day, spend the day together, hang out, So I think all of that is super, super important. Now, it was like midnight. Did I want to go home and not play another round? Cards Against Humanity, maybe, but it was also an opportunity to really get to know those folks. So there's that. There's, I've mentioned Alethea and just the graph, just proactively talking to them. If there's not a lot of I have a blog, but there's not a lot of writings on AI that I've, written. And so, just going through all the deals I've done in this space. And so just, having to prove, that I would be a good partner and I would be a good value add partner who is psyched as anything about what they're building, and I want them to feel that way, that, I will be thinking about that company, day in and day out to help make it a success. And so it's really communicating that back to them. So there's just been a lot of scrappiness, like flying to places, having dinner, having other entrepreneurs kind of vouch for, how I've been helpful. It never ends, right? Because you're only as good as your last deal. So.
And I have no shame in messaging somebody like again, and then trying a different social. Maybe I'll start on LinkedIn, go to Twitter. I've gone to Instagram before. I'm like, whatever it takes. I'm like, if I love a deal and believe in the founder and what they're building, then I feel like you just have to do it. But I also completely agree with you where a lot of it is networking. And even during NFT New York City this last time, I was exhausted. But there's one part that like you have to stay out and build those relationships and get to know people. But then there's the other side of me that's like, okay, I need to go to bed to actually be able to function. So completely.
Well, I'm a big believer in sleep because that's also when, you're able to synthesize everything, right? So I do believe you need both.
Yeah, definitely. So I want to end it with two last things. So what is your vision for the future of Future Perfect Ventures?
Yeah, so I'm thinking about that a lot, given how much the sector has evolved over the last 10 years, and it just blows my mind sometimes. I think we're getting to this stage where, scalability does matter. even if I look at our pipeline, we have so many entrepreneurs that I've invested in previously, like Web 2 or even Web 1, that are building, and they're looking for our input into the Web 3 element and the right infrastructure to build. And that's kind of a very easy thing for me to do. And so, I think the next 3-5 years are going to be about scale, and that includes scaling the fund. So it includes scaling FPV, and just toying around with different ways to do that. I'm still a solo GP. It could mean merging with another entity. It could mean hiring, other folks. There are a number of different structures that I've been approached with and that I've been thinking about. But all of this has moved so quickly that, I'd welcome the opportunity to work with colleagues on a daily basis of really thinking through some of these challenges and how do we, what are some like security audits and, smarter security audits, AI-enabled security audits is an area I've been spending time with, right? There's a proliferation of those now. So yeah, it'd be great to just talk to, folks about what are the nuances, what are the differences, and just have a team in place for that. So yeah, I see us expanding, potentially merging with a larger entity that values, long-standing network in space.
I was going to say, it's awesome that you are still a solo GP and you're on your third fund. So congratulations. That's absolutely amazing. And
it's gotten easier.
Yeah.
It's gotten easier.
Yeah. So what is one final piece of advice you have for the listeners today, whether it's for other people who are in venture capital, other founders, or maybe people just looking at jumping into Web3?
Yeah, well, I'm, as you are, a big fan of Web3. I think it's inevitable, regardless of whether we have these, obstacles along the way, whether it's regulation or, bad actors. They're always going to be there. It's not dissimilar to what was going on with the early internet days. I would just encourage, I encourage everybody I can to get involved. Because it's just really rewarding to be involved in the early days of adoption of something that's really going to change the way we do things and change people's lives by giving them more ownership, by giving them more autonomy, more assets, which is what I think the end result should be of all of this. So I would say, yes, get involved. And there's lots of different roles, and, they go from technical to marketing to community management. So just find out what you, love to do and just find a team of folks that you enjoy. On the venture side, look, I think it's a tough time right now, but I also think it's a good reset. I'm personally kind of enjoying this time of spending more time with entrepreneurs, spending more time getting to know my fellow, other GPs and investors that I would like to invest more with. And the slowdown I'm taking as just, a great way to reconnect with folks, and then obviously look at some really interesting deals too. So I'm an optimist. I think there's a time and a place, and you need these cycles, and the cycles all serve an important purpose.
Yeah. Awesome, Jalak. Well, thank you so much for coming on today and sharing your story. Where is the best place that the listeners can reach you at and follow along?
Yeah, well, Twitter is great. It's at Jalak, so it's my first name. I am on Telegram, although I'm not like a heavy user of Telegram, but I'm Jalak J, so JALAKJ. I'm on LinkedIn, and then my email is jalak@fpb.vc. But I'd say Twitter, seems to be where I have most of my activity.
Awesome. Well, thank you so much for coming on today, and I'm looking forward to continuing to watch you on your journey.
Yes, and likewise, I hope we do something together soon.
Awesome. Thank you.
All right. Take care. Bye.